the idea that you should be trading a certain amount of frequency probably is more related to your beliefs about trading and potentially even the approach that you take to your trading than anything else.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
In episode 43 of the Two Traders Podcast, Darren and Walter focus on different aspects of the trading game and talk about why this is. You'll also hear why Walter's traders have difficulty with overtrading, while Darren's traders have difficulty pulling the trigger. You'll learn what you must keep in mind when trading Darren's system, and why how you find your profits with your system is entirely up to you. You'll also find out why you may not marry your dream girl, and how do you know when to re-examine what you believe in regards to your trading. Also, is there any proof with any trading systems? All this and more in episode 43 of the Two Traders Podcast.
Yeah, you bring up a really good point. I think this idea that your traders who follow your system have a hard time pulling the trigger. So really what's happening is because of the basic structure of the system, it encourages a different, or in a different way it's confronting. So let me explain this another way. Because of the way that I trade, and so much of the emphasis is on the setup, right? This leads to most traders looking for the setup, and that looks good enough to me, I'll take it, that sort of thinking, like that. It's an overtrading. It encourages overtrading in a way. And most systems are kind of set up that way, where, look, this is what a setup looks like, this is how you take it, and then you manage it like this, and this is how you exit. That's kind of a normal sort of, if you pick up a trading book, that's what you're going to see. And if you pick up my trading book, that's what you're going to see, right? That's a normal thing. But your approach is different, because what you're basically doing is you're saying, no, it's not really a setup. It's just managing the ones that are winners, essentially, in the right way. So you take all of them, and then some of them are going to shake out and be good, and you just want to make sure that those can be really, really good for you, right? And so what that sort of encourages is people become gun shy, because they say, oh no, here we go again. I'm going to, you know what I mean? It's, here's another loser, or is this going to be a loser? Or I don't know if I should take this one. What you're saying is, look, guys, you got to take them all. You take them all, and some of them are going to shake out. So it's a very different approach, and I can see why we're coming at it from different angles, because I'm coming at it from the, let's analyze the charts and decide whether it's a trade. And you're coming at it from the, let's take a trade and analyze whether it's a winner, basically, Exactly,
yeah. Yeah, I'm focusing on the exit, and you're kind of focusing, I suppose, more on the entry. And yeah, every bar is a valid entry to trade in my system. So every time a bar closes, there's a setup to enter. Obviously, if you're already in a trade, if you're in a trade long and the next setup triggers long, then you don't have to keep adding positions, of course, although you can do that. You can trade every bar and then just manage the ones that win. But my trading relies on price to move, and obviously if price consolidates, then that's when you take the hits. So yeah, it's difficult. I find the difficulty most people have is if they've just had a winner and they've exited, and then they've got to re-enter the market, they find that difficult. And likewise, if they've had a loss or two losses on the trot, and then they've got to enter again on the next bar, again, that's when they're going to feel. I mean, I suppose you could say it's loss aversion.
Right. When you have let's say you have three losers in a row, in the back of your mind, aren't you thinking, well, I'm due now for a winner? I mean, is that something that comes into your thinking? Very
much so, yeah. That is, what runs through my mind at that point is, I know that my system works if I keep taking the entries, okay? There's an element on the exit as well. I need to make good decisions on the exit. But essentially, if I keep taking the entries, then my system keeps making profit. And I'm basing that on my live trading as much as my backtesting.
Right. That's fascinating. And so when you present someone with this this approach, what is it like? If I were to come to you and say, Darren, show me how you trade. I want to see how. I want to do it like you do it. Okay, this is the way to go. And like you say, Darren, it's so true. When we're new, and I was no different from any other trader. When you first get into trading, really what you're trying to do is, it's like when you first get into dating. You're just trying to figure out what you like, and you find out, well, I really like girls who I think are pretty intelligent. I just can't go with the bimbo or whatever it is. You sort of figure out what you like, and then in the end, you really know what you like, and who you want to marry or whatever. And it's the same with trading. Like, you're trying all these different systems. You're figuring out what works. You see who you think makes sense, what they have to say, and maybe you pay attention to them, or maybe you pay attention to them for a little while and then you leave and then find somebody else. But in the end, you really need to settle on something that makes sense to you, that fits your beliefs, and that's what you're going to stick with. So if I were to come to you, Darren, and say, all right, show me what you do, what would you caution me against? What would you say? You say, Walter, look, you can do this, but you have to keep in mind X, Y, and Z. What would that be?
You'd have to keep in mind that you're going to lose half your trades, okay? And you're going to have to keep in mind that you're going to have to make a decision about how you want to exit your trades. So you're going to have to decide whether you're going to hold your trades for longer, okay, get bigger wins, accept more losses, or you're going to kind of scalp your exits. So you're going to take smaller wins, but your losses are going to absorb more of those wins when they come. So I'd warn against not being decided on how you want to, what sort of exit strategy you want to use as well. On the point you made about dating, again, here's where I kind of think differently. We might decide that we like intelligent brunettes, okay, but generally at the end of the day, most of us don't get a lot of choice, and I think a lot of people settle for like the only woman will take them as well. So we might believe that we're picking the woman that we want, when we're dating, but I don't think that's probably the facts of the matter.
Yeah, you bring up a good point. What psychology has found with that, one thing that I remember, a study where they found that typically what happens is the men, like in heterosexual relationships, the men get married when they're ready to get married. And it just happens to be the woman who's there, right, who they're with. And the women get married when they find the guy who ticks all the boxes. So they're kind of, in a way, they're kind of always ready to get married. I mean, I know that's a bit of a generalization. It's not true of all women, but in a way, they're kind of looking for the perfect guy. And they're just looking for enough of those boxes to be ticked before they'll say, yeah, I'll marry this guy. Whereas the men are just kind of like at that stage in life, like, yeah, okay, I'll get married now. And it just sort of ends up I think essentially what you're saying is you're agreeing with that research on the men's side of things, right?
Well, yeah, and I think when people pick trading strategies as well, they might see something that appeals. It might just be the first thing they stumble upon, and then convince themselves that yeah, I really believe in this. This is the way I should be trading. And I wonder whether people are kind of doing it back to front, and rather than what we should all be doing really is just like looking at the charts and saying, right, well, if I had to make a system from scratch, how would I trade this? But unfortunately, we all already know about trend lines, support and resistance, price action, because we've read about it, and I think that kind of blurs the picture and leads people to convince themselves that this is how I should trade, this is the sort of trader I am, rather than just kind of playing with it. I think if you probably had a bunch of kids and sat them in front of the charts and told them it was a game, explain price just goes up and down and you need to make money by the end of the day, you probably have some really interesting kind of core strategies come out of that. And I just think we're drawn into believing stuff so easily without really examining it deeply.
Yeah, absolutely. It's sort of the idea that, let's say that if I were to give you a Bible and just say, look, read this book, and you're a 9-year-old kid and you can read, but you have no context. right? And then if I asked you after you read the Bible, I'd say, well, what? Tell me about what you read, right? What you hear in terms of the book report on that Bible would be completely different to the 45-year-old who's been raised in the church and knows all about the Word of God. I mean, that's it's a totally different approach, isn't it?
Yeah. And, I think that kind of causes a lot of problems for traders. And, I do see it with people who kind of get my thing, and they've perhaps been trading very technically for a long time. And I think if it doesn't really suit you, the particular way you're trading, at some point you're going to say to yourself, okay, well, maybe I need to re-examine all of these things that I'm believing. It's very difficult because there's so little in trading with regards strategy that is, okay, this combination of technical elements together is going to work. There's no kind of like definitive proof on any of it. There's always like an element of discretion in it, if you like, and that's kind of always sowing that little seed of doubt in there. And I think you need to get to that place where the way you're trading, those kind of seeds of doubt, completely gone. And I think when you get to that feeling, then you've kind of found your thing.
Absolutely. So if I were to ask you, I know what I would say. If you want to squash the seeds of doubt, and you've got these seeds of doubt, well, how do you do that? Well, there's a couple of different ways that I would say this is how you might approach this. And I know they're probably going to be different to yours, but let's say that someone came to me and said, look, Walter, I want to squash the seeds of doubt. I want to make sure that I'm rock solid in how I approach the markets and how I trade. Well, I would say there's a couple of different things you can do. One is you can go deep into Forex Tester and you can test this stuff out. It's not going to prove to you that in the future it's going to work, but given the data that we have here, you can go over the last 12 years and you can trade this system and see how it would have worked out. That's number one. Number two, you can get a demo account. And you can get a demo account. You can trade this system so that you're trading it in real time. You don't have any hindsight bias. You don't know that there was, for example, in Forex Tester, you know that there was a GFC in 2008. So you know there's going to be a lot of runners there at the end of the year. And so that's a different approach when you're trading demo. You don't know what's going to happen in the future. And then finally, I would say get a tiny account. Get a small account. If you've got 50,000 euros to trade, get 500 euros, put an account, trade it live, and see what happens to that account. See how much confidence you can get when that turns into 2,000 euros. These are the sorts of things that I would say to somebody, if you really want to squash the seeds of doubt, the best way to do it is to just do it. And to me, it makes sense to take this training wheel approach where you start with a little bit, then you go, back test, then you go live, then you go, forward test and so forth. But I know that's kind of my bias. I think it's a process that you can follow to squash those seeds of doubt. Other people might say, just follow me, son. Come over here. Watch what I do and see how it all, watch the doubt melt away. And I don't know if that's really the way to do it. I think doing it yourself is probably the better way, but I'd be encouraged by what you could help people with. Like, what would you say? What would you say? How would you encourage people to say, look, this is how you squash the seeds of doubt?
I would say, I agree with what you say, backtesting, kind of, understanding how your system works in the market. I think one of the key things is you need to get brutally honest with yourself about why what you're doing already is not working and why you've got those seeds of doubt. And they're probably coming because you're making the same mistake over and over again, and rather than adjusting so you're not kind of drawn into your mistake, if you like, they try and kind of persevere on and kind of battle against it. So I think if you examine exactly why the system isn't working for you by looking at your past trades and the data from your trades, and then adjusting your strategy to that, then I think you can get to that place where you're not doubting the system so much. So for example, let's say you're trading support and resistance and you're trading for 3-in-1 risk to reward. You should be making money based on what the charts have been doing, but you're still not making money or treading water. And it might be that, say, you're closing your trades too early or you're moving your stop up too early, And those kind of things, your kind of mind blanks those out that you're actually doing that. And it's only when you get really honest with yourself and see where you're making the mistakes, then you can start to correct them. So it might be that you're more suited to aiming for a smaller win, but you're kind of trying to force yourself to be a sort of a trader who holds on to his trades. So I think, you know, really you've got to look at yourself and see what are the common mistakes you're making, and if you can remove those, then it can make a big difference.
Yep, absolutely. And a lot of those things you can trace back in your life to other areas of your life, I think, to find those sort of repeating patterns. I think we've talked about that before, but absolutely, yeah.
And I think that we're kind of, again, another one of the rules is that the kind of unspoken rules is that you've kind of got to, you're not allowed to change things too often, and it's really bad to change things. If you're consistent and you're successful, then you know it's different. But if you're struggling, then change something. Try something different this week. Try a different exit strategy. Try a different stop placement, and you know the week after, try something else as well. Kind of feel your trading as much as be, you know, so sort of academic and technical about it.
Yep, that's great advice. That's great advice. All right, Darren. So I think we're ready to wrap it up here. So basically, I guess what we've basically come to here is that the idea that you should be trading a certain amount of frequency probably is more related to your beliefs about trading and potentially even the approach that you take to your trading than anything else.
Yeah, completely. Personality.
Great. All right. Well, thanks for your time, Darren. We'll see you next time.
Cool. Cheers, Walter.